And joining us for more on these moves this morning is Kari Firestone, the co-founder of Arias Asset Management and a CNBC contributor. Kari, I guess the market now is forced to deal with the idea that these tariffs were not the top levels that we had seen, that this was not a ceiling. If China retaliates, if other countries retaliate, and then what President Trump does in response.
Yeah, hi, Becky. Definitely that's true. If the word reciprocal was used yesterday, I think we're seeing it play out in real time today. And reciprocal is what we're going to get across the board since, we've started this and this was inevitable. What's very concerning is that we've seen the reaction of all of the retail, apparel, footwear, furniture stores, everything that was consumer related had such an incredible shift downward yesterday. We're going to see more of that today, but it's going to expand to other sectors. And there doesn't seem to be an end in sight right now.
Yeah, and watching numbers like Amazon at this point down by about 6.8%. Amazon was down by 9% or just over 9% yesterday. I know it's a similar story with Apple, which was down by about 9% yesterday. And then earlier this morning was down by maybe 4%. I haven't seen those numbers in the last few minutes. Are you looking at areas that you think you can find bargains in at this point, or is there just so much uncertainty, not knowing, and then questions about what this means for the economy, that you would stand back and wait to see where things shake out?
I think there's two ways to look at it. If we think about what happened 5 years ago at the pandemic, there were 3 days in March of 2020 when the market was down 7.5% or more, right? 7.5% or more on 3 separate days. And if you bought into that, you did very well. It doesn't mean that the entire market isn't going down, and you have to be careful. But anyone who's been looking at semiconductors, semi-cap equipment companies that didn't own those stocks, they're going to be down 50% or more from their highs. That's a place to look. If you've been thinking about what is protected from tariffs, United Healthcare, that's a stock that had its own bear market months ago, of course. There are names like Waste Connection, Nextera, utilities, those that are U.S. based are definitely going to go down less than the market could go up. Some of them went up yesterday. It doesn't mean that the whole market can't continue to slip. When you have essentially a regressive tax, if you don't tax corporations and wealthy individuals or capital gains, and you have to try to lower the deficit, money is going to come in from tariffs, but these tariffs are going to hit consumers, particularly middle class and lower middle class. So that's where you see the real extensive damage. And I think it's too early to buy those stocks that import so much and have to raise their prices a lot. But as I mentioned, there are parts of the market where you don't have as much of a tariff impact, but it's still going to feel the pressure of the entire system.